Hi there, this is the story of Navitas Semiconductor, ticker symbol NVTS. If you look at the stock price, more recently it went up from $2 to over $12. An amazing performance. And now the market cap is about 2.6 billion. So the most important question right now is whether Navitas is still a buy, if you can have another return like this. And the answer to that question, you'll find it in this box. During this video, I'll open the box and you'll find the answer here. Now, to understand my answer and also why the stock price went up so much, you have to look at their business. As you probably know, everybody knows, the price went up because of the collaboration with Nvidia. But what many people don't know is how this will develop. So you have to understand that Navitas, they offer their power solutions to Nvidia's next architecture, which is used in AI data centers. Their solutions, their technology, they have patents, offer power efficiency and cooling solutions. And you have to to understand that the full launch of this solution integration in Nvidia's next architecture, the full launch will be in 2027. And the market expects 2.6 billion annual opportunity. Now, you have to look at the numbers first. This is their opportunity. What the market expects. By the way, this is not sure. They only have the endorsement from Nvidia that their technology is good, will be used in their data centers next architecture. Now, annual opportunity 2.6 billion, starting with 2027. Till then, of course, you might see some increases in their revenue. Now, let's compare annual opportunity 2.6 billion. Current market cap 2.6 billion, around the same level, right? What does it mean? Well, if they make 2.6 billion revenue, and if they're able to deliver a profit, Navitas is already very valued. The next question is, can they increase this opportunity to more, from 2.6 billion to, let's say, 5 billion? If yes, then you may have another double from this level. If not, the revenue will be flat and they don't make any profits. That will be bad. Quite bad. Now, if you look at their current business, keep in mind this number, 2.6 billion. Current revenue for 24, $83 million. So it's a huge difference. That's why the price went up so much, because of this opportunity. But more recently, for the first half of 2025, revenue has declined from 43 million year over year to 28.5 million. So for the moment, they're struggling. And their losses over 65 million. Now, they will survive. Of course, they will survive. They have enough cash to fund those losses for 25 and also 26, till they make some money from this new opportunity. Now, here is the problem with this company. Yes, they have this opportunity. In my view, market cap is already valued at this opportunity, what they can deliver in the future. But another thing, if they deliver, let's say, about 2 billion in revenue, but if they don't make a profit, look over the last 3 years, only profit here 22, 23 a loss, 24 a loss, first half 25 a loss. If they don't make a profit on this revenue and losses go higher than this level, that would be quite bad for shareholders, not for Navitas. Navitas management employees will get a lot of benefits, but you as an investor will be quite burnt, because if you look at the number of shares here, number of shares, this number has increased over the last 3 years and a half, from 155 million to over 213 million. Now, here is the thing. when Navitas reports in fact a loss, someone has to cover those losses. And what will they do? They'll issue more shares to raise money from the public markets, from investors like us, common investors, to fund their operations. And if they report let's say 2 billion revenue, and their loss goes to 500 million from this level, someone has to cover those losses. And then again, they will issue more shares to cover their losses. So the market cap, yes, can increase, but the price will go down when they issue more shares. And this is the biggest risk with this company. Not becoming profitable, and you have more dilution in the future if they don't become profitable. As I said, if you look at their balance sheet, for the moment they have some cash, 161 million. And you have to ask yourself, how did they get this cash? 161 million when the revenue in 22-23 was even less than that, 79 million, 37 million. Well, because they issue more shares, there is money from the public market. That's why they get that cash. And they have no debt. This is good. Now, this is the risk. You have to take into account this risk because, yes, you can look only the upside. From this level, you may have another double if everything goes well. But if they don't succeed, or their market opportunity is lower than 2.6 billion, that will be quite for you as a shareholder because the price will go down. And you don't want that. You don't want to have a huge loss on your investment. So the risk, this is dilution and not becoming profitable. Now the upside, if their solution, they become the only one who offer this solution, power efficiency and cooling, and they keep improving themselves, then their opportunity can grow more than 2.6 billion from this level. But only if. And again, we don't know for sure if they can reach 2 billion revenue. Yes, they have an annual opportunity of 2.6 billion. This is what the market expects. But if it turns out that they can deliver that opportunity, you will see a huge drop in the price of Navitas. And that's the biggest risk. So to open the box and show you the answer whether this company is a great investment or not, in my view, is not. Right now, it's already overvalued, the stock price. The market cap reflects their future possible opportunity of 2.6 billion. But again, future possible. You want that word, possible opportunity. It may be true or not. When the market finds out that they can deliver, if that happens, of course, that will be bad for shareholders. That's why, in my view, this is a risky investment. It's like pump, push the stock price higher, and then dump. Get rid of it, all of it. If you want to speculate, yes, go ahead. But if you are a real investor, who invests in real businesses, don't fool around with this company. On my portfolio, if you go to my profile and choose title investor, my portfolio, there you'll find real businesses. And my return over the last 4 years, has been over 40% a year. And more recently, I invested in a new company, which is also undervalued. And all my investments are up. You also get access to an investing course, other in-depth analysis, and of course bonus to the previous level, Spartan and Gladiator. So that's it for this video, and if you have other questions, please let me know in the comments.